The budget has, in my opinion, three large parts. One is to keep more money in the hands of the middle class. The second is keeping the fiscal deficit in check to 4.4% for 25-26. And third is to keep the momentum on the infrastructure continue. These are the three sort of legs of this budget for me, and which all of them in a way combine well with each other to ensure that the participation in the market grows, as well as the industrial growth also happens in the country.
So FDI limit for insurance sector is also is to 100%.
India has always tried to increase the penetration of insurance in Indian life, which has not been successful. We have increased the limits from 51% to 74% and now 100% to ensure that the foreign insurance companies come with their newer insurance policies and their marketing framework to increase the insurance penetration in India. At the same time, there is a caveat that has been put, which says that all the premium collected has to be invested in India, so that as and when people require that compensation is given out of the local funds.
So big relief is given to middle class, no tax up to 12 lakhs with the announcement by the Tax Minister.
I think this is one of the larger announcements, the major announcement that, in fact, yesterday Honorable Prime Minister also had said that there is something coming for the middle class, and this is, I think, what he meant by that, that up to 12 lakh of the tax bracket, but 12.75 lakh rupees if you earn as a salaried class, you don't have to pay any tax. And I think that's going to add probably 4,000 to 8,000 rupees in the hands of every family in middle class going forward, which is a welcome move, which is going to increase consumption to some extent, also investment to another extent.
So how does this benefit like stock market and
when the consumption increases, the stock market companies which work in the consumption areas like television or two-wheelers or four-wheelers or soaps or shampoos, all of them get their products more uptake, and that's where their profitability goes up. The other side, if they don't spend money but they invest money into the stock markets, again that also helps the markets go up. So whichever way you look at, this is a welcome move for the stock markets.
Even Finance Minister announced that a new income tax bill will be coming in next week.
No, I think that is long coming. I think this is expected long back, and it's going to rationalize and reduce the overall complexity into the tax code, which has crept up over last almost probably 20-30 years, where the Income Tax Act has become very long and very complex. And so this attempt at rationalizing that was on the anvil. It has been announced before that it's going to come. I hope it will reduce the overall complexity and also clarify many things in a easy way.
So even fiscal deficit is kept on 4.2.
Fiscal deficit control suggests that the government is spending less compared to its income. Usually, is government across the world, they spend more than what they earn. But if you can keep it under control to a reasonable limit, then the country is considered more creditworthy and more in control of its destiny. So that's where most of the foreign large investors and also Indian economists and large investors watch the fiscal deficit quite keenly. 4.4% from this time's 4.8% is a good direction, and I think suggests good control of governments and also government's ability to reduce its cost vis-a-vis many demands the governments have usually.
So how you rate this budget?
I would rate this budget 10 out of 10, given the trinity that they have achieved in terms of giving more tax relief to middle class, increasing the infrastructure spend, and at the same time keeping the fiscal deficit in control to 4.4%.
If you like the video, do like, comment, share and subscribe. If you like the video, do like, comment, share and subscribe.